isn't that the thing where like people are trying to figure out like the limits of the Fed and are they out of ammo? Isn't it all just psychological? Because I don't know, 70% of people don't even really understand what it is the Fed is doing. So anything they do is psychological. It's just the Fed saying we have this market's back, and the only time the Fed really is going to lose whatever power it has over the markets is if it stops being psychological and people start just going on exactly what they're doing and people understand a little more. Like
the Fed is a placebo. It's the blue pill.
Yes, it is. It is. I mean, obviously there are trillions of dollars that they're moving around, but
it's psychological and a few $1 trillion.
yeah, a few trillion here, trillion there, and it's a placebo. Okay.
Amazon. So Amazon reported earnings. Bezos said, if you're a share owner in Amazon, you may want to take a seat because we're not thinking small. Under normal circumstances in this coming Q2, we expect to make some $4 billion or more in operating profit, but these aren't normal circumstances. Instead, we expect to spend the entirety of that $4 billion and perhaps a bit more on COVID-related expenses, getting products to customers, and keeping employees safe. Question, getting back to the cynical part of my brain. Did they have to show a loss this quarter?
It's almost like he wanted to, I guess. Maybe, but
would it have been bad looks if they showed a giant profit?
Probably. I'm sure he's telling people, yeah, start spending now and get prepared for this and count it as whatever you want to. But yeah, we're not. I agree.
Right, and given the fact that he's already in the president's crosshairs.
So someone asked us. I was going to get this in listener questions, but we might as well do it now. He said, at what point is Amazon too big? Call it like Standard Oil monopoly big, and the government steps in. Is this already happening? Don't you think this, even though we're talking about this winner takes all outcome from some of this, don't you think this situation actually makes it harder to regulate them? Because in the midst of some of this, and if they're coming out stronger than ever, you're not going to want to regulate one of the companies that's helping keep things working, right? Don't you think this actually makes it a little easier for them to not be regulated for longer? Like it pushes that out a little bit?
I don't know, because it's not telling them to shut it down. It's just break it up. AWS could be a standalone company.
Yeah, that seems like an easy one. But
so I wrote about this yesterday. Over the last, I think I went back to 2014 when Facebook was included in the S&P. The S&P market cap has grown at around 8%. And the market cap of Facebook, Amazon, Apple, Microsoft, and Google, which are the 5 largest companies, grew at 3 times that pace. And so if that were to continue, in 7 years, 5 stocks would be half of the index, and 6 years later, so 13 years from now, it would be bigger than the index itself. At some point, if this continues, and I don't think it can continue because the government is going to have to step in. There can't just be 5 companies.
Yeah, or competition steps in, and maybe it doesn't even have to be the government, right?
True.
I mean, I'm just saying
if this were to continue, and I don't think it will for this reason, things will have to change.
Don't you think this is one of the most pessimistic things I'm on is the fact that they talk about how they have to have these COVID-related expenses to keep customers and employees safe. Isn't this going to be the hardest thing on small businesses going forward? Like, isn't there going to have to be, like, any money spent on cleaning or sanitary stuff or, like, for restaurants or whoever, small businesses? And can't that almost be a write-off to the government somehow? Because how are these places ever going to, first of all, they're going to be operating at a lower percentage of people coming in if you're a restaurant. Let's say you try to open up as a restaurant and you put these plexiglass walls up and you have to separate the tables so you're operating at 40% capacity or whatever it is. First of all, you're operating at lower capacity, and second of all, you're having these other expenses incurred where you're going to have to clean more, you're going to have to be more sanitary and keep people safer. I just don't see how some of these places can afford to do that if the government doesn't just say anything COVID related, it's a complete write-off and you're not going to have to worry about that. Otherwise, how do they stay in business? I don't see how that's possible. If you have these extra expenses on a smaller customer base, it just seems like the math for a lot of these companies is just going to be really, really difficult if they don't have Amazon money to throw around and say we're going to spend billions on COVID-related expenses. A lot of companies just are going to say it's not worth it for us to keep operating, unfortunately.
So there was an article in the Washington Post. I got a subscription because I wanted to read this article. $23 for this for a year.
You know, I believe you get a free year's worth if you're a Prime member.
That's fine. I'm happy to pay $23, and it's $100 a year going forward. Anyhow, Not
That
the
money
point.
is
The point
going right into Bezos' pocket. I hope you're happy. You're helping make inequality worse.
Lockdowns triggered by the pandemic have forced the temporary closure of 263,000 stores. Sarah Wyeth, who is the sector lead for retail and restaurants at S&P Global, said the traditional retail sector has been distressed for many years, and now this intense shock is pushing more companies to the brink. So the proportion of retailers that S&P considers distressed is doubled from 15% to 30%, and this is one of the reasons why the Fed stepped in with their placebo and said that these fallen angels we got them.
I thought the picture they used in this story was kind of kicking these places while they were down.
Which one?
They showed the mall based on the stores, and they showed the lowest rated stores to the highest rated stores in terms of can you make it, and based on your credit quality. And they showed it in, when you go to a mall and you try to figure out where a store is and they have the little map.
Oh, that's right. I didn't put that together.
Yeah, so they show it like, here's level 1 of the worst stores, and
right
in the picture like the mall. I thought that it was kind of creative, but also kind of mean. But
so here are 2 more charts I'll put in the show notes that are excellent. U.S. department store revenue is down from a peak of inflation adjusted $30 billion in March of 1999 to under $9 billion today. Yikes!
I just don't malls especially. They were already in trouble in a lot of places. What do you do with those spaces?
I don't know. There's too many stores. So foot traffic, I don't know how this is measured, but J. Crew, they have 258 stores, is down 97%. And there was so J. Crew finally, Chapter 11, they're going to restructure. They're not going to disappear, but they're going to restructure between Madewell, which is a company they own. I don't know who Madewell is. Do you?
No, I don't understand why the companies like if J. Crew went out of business. I can't believe Banana Republic wouldn't be much further behind. I think J. Crew, how many times did they go through an LBO? A few times, but couldn't some of these? Why couldn't some of these stores just be online only? I have been shopping online at places like that for the last 7 years now.
I feel like you are a huge J. Crew guy, enormous.
I probably have a J. Crew t-shirt on. I keep seeing all these people making fun of J. Crew going out of business and making fun of the people that wear their clothes, and I'm thinking, yeah, I shop there. I'm not gonna lie. It's whatever.
So,
they have like 70% off sales every other week. But I don't know why some of these places couldn't just go all online and just because they never have enough inventory at the stores anyway. Obviously, they get something from those stores, but if you take away that expense, just lop off all of that lease payments or buying of real estate, like I don't know why they couldn't just try to go all online.
I don't know the business enough to say why they can't. I have no idea. I mean, it makes sense to me, I guess, in theory. This is from a 1992 profile of the company. Quote, J. Crew displays the understated cool of a winner. Seemingly, lots and lots of people want to live the J. Crew life, which means that they want to buy classic American wear, broken-in chinos, vintage work shirts, or the J. Crew barn jacket, in company parlance, at reasonable prices. And that whole thing just screams Ben Carlson.
How did you find a 1992 profile of J. Crew?
It was in an article. So listen to this. Analysts say a series of missteps in both fashion and finance have left the one-time mall darling with slipping sales and nearly $2 billion in debt. Much of that debt stems from its 2011 acquisition by the private equity firms TPG Capital and Leonard Green & Partners in a leveraged buyout. Yeah.
Right.
Probably not a great candidate for all that debt.
No. Again, yeah, this is just forcing... Obviously, if you see these companies that are going into bankruptcy, that probably could have raised some more debt in the markets or gone for a loan from the government, things are really bad if they're saying, all right, because even if we raise some capital, it's going to be, it won't work, or it's not going to last. So, and I think Neiman Marcus was the other one. The companies that are going out of business now, they were really, really hurting.
So how many more of these? There's got to be tons more.
Yeah. Over the next year or two, pick off the retailers. It's going to be a lot of them.